All right, so gonna be a quick video. This started January the 3rd, 2023. So just over a year. We had 92% on Amazon. Now, this is a really risky trade if you were to enter now, just because we're on the approaching the order block on the weekly. So this is a resistant zone. So if the price action does come up here, more than likely we have a really high possibility that it may start coming down, just due to the fact that it's already gone up 92%, and having a retracement or a pullback is very healthy. Now, if it does pull back, it may come over here, create a higher low, which would be right around the previous weekly low, and then maybe come up, maybe get rejected again, forming a double top, and then possibly coming back down to this really nice order block. And this, again, this is on the weekly. Now, if the price action does break up because of FOMO, fear of missing out, and people start entering the trade, and there's a lot of hype about it, everything's going on the news about it, and more people start jumping into this trade, then of course the volume will start picking up. We may come up to this level, then possibly come back down, get support, and then depending, because nobody knows until it happens, depending on the volume, depending on the people that are entering the trade, it may continue coming up, break this level. Now, the safest entry is if it breaks above 188.55. That's the top of this order block. Once it breaks above, you can enter a third of your entry. Then if it comes back down and gets a support bounce, starts coming up, then you can add your second third of your entry. And then once it starts coming up here to around 195, then you can add the last portion of your entry. So now you're in 100% for your long, or for your entry. Now, once again, this entering right now is very high risk, just because you have this order block of resistance zone, and then just above it you have another very strong order block. So if you're going to think about entering this one long, I would strongly recommend to wait for this area. Now, the percentage that you're missing out on, if you were thinking about entering right now, is roughly around 18%. However, if you do enter, you do have a very high likelihood of it coming down 24%. So this is not very good risk to reward management. So in my opinion, I would just wait, see what happens, see if it does come down to this area. If so, then this is a really nice area to enter. Or if it comes above this area, set your alerts. To set an alert, all you do is you right click on about the price you want it at, and then you go to set alert. And then of course here you can put whatever you want. Normally I put the date, and then I would say, look at chart. I make a little note for myself, and I do create. And that way, when the price action does cross this level, then of course you get notified, and then you can look at the chart to see if possible entry is likely. Here's some additional thought process on this. Now, for the people who trade patterns, this is an inverse head and shoulders, and patterns, they're very subjective. Some people may not draw this here, and some people may draw it here. But we do have a left shoulder, we have the head, and we have another shoulder. We do have the break, and we have a pretty good retest, this one and possibly this one, and now starting to come up. And of course, this is the measure move from the neckline to the top of the head. We just copy that or clone it by right clicking, and then of course coming over here and then clone, and then just drag it over here for the measured move. Now the measured move, according to this, would be just underneath our 1.272 on the fib extension, which the price target would be 198. Now my thought process still stands as far as this level being major resistance and this level being major resistance. But just know that there are people who do trade the patterns, and they've possibly seen this right here, and of course leading to the bullishness that may come up, and then people are going to start taking profit, and then it may come down, and then if it bounces in this area, then this will be a nice time to enter. But just know that we may get rejected again here and then come down. If it breaks below this level, of course I'd have my stop loss really tight, just because it couldn't continue coming all the way down here. Now if it does bounce here and then start going up, well, then you're still in the trade, you haven't got stopped out. And if you were to put a stop loss, let's say it comes to about right here, your stop loss is around 4%. And let's go ahead and do this. So for your stop loss, it would be, do a yellow. It will be 161.99 if you were to enter somewhere in this area. After, of course, it comes up and gets rejected. So once again, my thought process still stands as far as the break of this level. However, if you're wanting to enter and it comes up here and it starts coming down and it starts to bounce in this area, then this would be the stop loss, 161.99. Or you can just do 162. And then hopefully it comes up here, maybe get support again, and then breaks to this level. But this is the key level right here at 188.55. So I do thank you so much, and we'll see you in the next video.